Welcome back to the show, everyone. I am Capital Mindset. If you're new, feel free to subscribe and like the video if you did enjoy today's video. Now, today's video is going to be a reaction or me sharing my thoughts with the following topic, that my first and last response to Coffeezilla. And so I'll be kind of breaking down, what I'll be sharing is not entirely, groundbreaking or novel, but I'll be highlighting some things that I hope Coffeezilla does go over in his response video to this video. And I think it's also a very interesting form of video because we can look into see how we can spot some red flags. Now, these red flags aren't smoking guns. They're not evidence or proof beyond a reasonable doubt that this is, in fact, potentially a problematic figure, but it does raise a lot of questions and leaves more questions than answers, in my personal opinion. So this video originally comes from the response to Coffeezilla's most recent video, but we can trace it back to this video here. 19-year-old millionaire gets called out in his own commercial, Newer Trades. And so where he gets called out specifically for taking the trades of someone else, sort of arbitraging the information. And so he does make the claim in the recent video with Spencer Cornelia, which we'll get to, that, well, of course, I was not opposed to this question being asked in this own commercial, which is referring to him paying a sum of money to get on another person's podcast. He says, I approved all the questions. Well, that doesn't really prove anything. That's just a blank statement. Doesn't really mean anything. Now, what we're seeing here is the trades from Newer Trades on the right-hand side, and on the left-hand side, someone else, which is not indicative or telling you that the other person, it's not an endorsement saying that their trades are legit and this person is taking legitimate trades. It's just saying he's taking trades. And so what we see here is he's copying word for word the exact language in the trades from the left and putting it in his own group on the trades on the right. And he even keeps the watermark in the bottom right-hand corner, which you can see right around there. Okay, so this video was made, and he does a response video of sorts. That response video is this one right here. Spencer Cornelia exposes Newer Trades. And so we're going to be going over some of the points here, but I feel like we'll come to this after the fact, because a lot of the points made here are also kind of interesting, but I feel like the bigger points are made in this gem of a video. And if he ever deletes this video, I mean, this video here is going to be a reaction to it. So at least this form of it will exist. So if we go to the 3-minute mark, and we'll go here. This, by the way, if you're wondering, TD Ameritrade merged with Charles Schwab. This shouldn't be a thing. No, this is perfectly fine. You can still access your documents, TD Ameritrade. I'm familiar with how most brokerages look. So at the very top-hand side, there's first red flag. You see the name on the left-hand side blurred out, so you should see the name right there. And then the account number is blurred out on the right. I understand the account number. I don't understand too much of the name, but he's a public figure. And so unless it's like a business account, which I'm giving you basically the ammunition to kind of negate this point and say, it's a business account. I don't want anyone to know my business. Okay, whatever. But it's kind of strange. So let's call it like a yellow flag, not necessarily a red flag. It's kind of bringing up some questions in me. And by the way, all the details matter. As we'll get to, every detail, in fact, of what he says, what he shows, really do matter here. And so another point that some of you might come up with is saying like, okay, there's a question, okay, the months, the year showing up to 2014, he would be extremely young in 2014. That's not really a red flag because that's actually normal for TD Ameritrade. That drop-down menu is going to show up to like 2014 as of now. It shows 10 years of records. So that's not abnormal. Okay. Now, when he pulls up the document itself, which we'll kind of go over when he says nothing's weird here, he makes a claim, I'm blurring out my name, my PO box, etc. All that's fine. We're going to get back to this page, but first, let's get to the meat and potatoes, what he says. I'm going to let him speak.
Right here, you can see just in December of 2021.
Very important detail. Again, every word matters. Just in December. Why did he say those words? Just in December. Just in December implies the profit an individual has made just in December. Not the year, just in December. Okay.
So right here, you can see December of 2020.
Just in December of 2021. Just in December of 2021. So he's saying here, just in December of 2021, what did you do?
21. My market value of my account was $8.6 million. My cost basis was $5.4 million, and my unrealized gain loss was $3.1 million.
Thank you. Just in December, my unrealized gain loss is $3.1 million. So he's implying here I just made $3.1 million in December. That's the implication of saying that. Okay, let's look at the details here. Details matter. We see stocks. He's blurring those out. Argument there that could be made. I don't want you to see my stock trades. Fair enough. Symbols, same thing. Fair enough. Quantity. Guess we could backtrace it if we know the cost base, et cetera, and we can see. Fair enough. Purchase date, very strange. Why are you blocking out the purchase date? We'll get back to that. Average cost, fair enough. Very similar to point number 1. Purchase date, why is that blurred out? Well, maybe because, okay, we're looking at unrealized gains and losses. Important for you to know. If you're like brand new to investing, in a broker statement, this is showing an unrealized gain and losses, the gains you have of shares that you have yet to sell. It is not how much money you've made. You have made no money, no taxable income has been generated until you sell those shares. So unrealized, he hasn't made any money. He has to sell it to make the money or lose the money. So the purchase date would tell us when he originally purchased the shares and the cost basis of those shares. So it could have been a 10-year hold. And if it's a 10-year hold, that's not very good performance. It could be a 5-year hold. It could be a 2-year hold. It could be a 1-year hold. Point is, it's not actually day or swing trading. Okay, so that's actually important to take note of. Now, we know from his video with Spencer Cornelia, which is showcased here, in this video, he does actually say, I have some investments, some long investments. So that's not really, it sort of checks out, right? It's not out of the ordinary. It checks out at the very least that there are some potential long-term investments in the portfolio. So those could be that one, right? But why is he showing us that? And why would he say the words just in December? I don't get that one. I don't get that one. And it's not, I don't think he's, let's say, made or implying that he makes $3 million or $3 million every month, right? It can't be, although it sounds like it. It really does sound like it because he's saying just in December. But I don't think that's probable. I don't think that's the case. And so he's not, I don't think he is actually making 50%. And so that's the misleading point number 1, red flag number 1. Okay, so if we go back in time, we see this page. This page is really important. This whole page is actually very important. It tells us a lot of information. We'll actually begin by actually showing that, okay, the question is this an account, a day trading account? Yes, it is. You missed this part or this section. And I'm going frame by frame, by the way, to avoid the potential excuse that I'm editing anything. We're going frame by frame. We're watching the video. We are not doing this post-edit. So cash activity summary, because this was a point brought up by people. And I read through the comments and saying like, oh, well, you know, some of the, let's say, counterpoints is like, this is his long-term investing account. It's not his trading account. No, it's his trading account. How do I know? Look at the left-hand side, cash activity summary. This would be shown in your brokerage statements as well. Cash activity summary, securities purchase, current. So that's for the current period, 15.2 million, off of a value of 8 million, as he showed us. Okay, 92 million year to date. That is insane turnover. This guy is definitely trading in this account. This is definitely the account used to at least do some day trading or swing trading. There's a lot of movement in this account. And so that's something that should be given to you on the left-hand side. On the right-hand side, we're going to cover this portfolio summary, cost basis, unrealized gains, unrealized losses, etc. That's going to be the interesting bit because it doesn't show realized. Okay, it shows no realized, and we'll talk about that where it's shown up here. So this part, very, very, very important. Okay, what do we see here? We see the margin loan at the very top. Okay, what is a margin loan? This is when you're borrowing from the broker, and I don't know what the exact rate is, but for these smaller accounts, and yes, by the way, this is a smaller account, the rates are going to be a bit higher. So probably between like 10-ish%, somewhere around there. I don't really know the number, but just plug in a number. It's going to cost something. Okay, that's what you need to take away from that. And most of the time, I would say borrowing on margin is not worth it for the vast majority of people. So, you know, there's that. But look at the stock value. So the stock value went up 2.59 from 6 million to 8.6 million. Fair enough. All right. We see an increase of 43.1%. But the top line tells us more of the story. The top line tells us the margin loan, which is recorded as a negative figure. By the way, parentheses in accounting is a negative figure. The reason why, it's because it's a contra asset to the stock portion. And then you take the total together and you get the total value at the bottom. The total value is his actual value. So it takes into account the margin balance subtracting out from the stock balance. And so what we see here, the most important line item bottom is your eye should scroll down to the total value, where you see it go down $332,000, or down negative 5.9% for the period. So he lost 6%. That's actually the return, 6%. And so, yes, sure. And by the way, the stock value, 8.612761.20, is actually matching perfectly the stock value here. So just so you're wondering where that number is going, that's going down there. So that's the stock value. He has a lot of that stock on margin. And a lot of that unrealized gain is actually just the margin balance getting wiped out right there. So he's actually still down 332,912. So he has more margin balance than the actual unrealized gains, which is 3.267 plus the unrealized loss. So netting that out, and it's less than the actual margin loan. So when you net that out, the value, the total value at the bottom gives you a delta of over the period, $332,000. So, okay, the long-term gains potentially, because we don't know the answer to that. Okay, that's positive, but it looks like a lot of activity. And there was $15 million in activity, by the way, $15 million. He did trades in December. We know that from, again, the cash activity summary. And let me just go back just to revisit, because again, we are just going frame by frame, and I apologize for you if you're getting annoyed by that. But again, we're avoiding the accusation that this was edited. Securities purchase. In the current period, 15 million. Securities sold 12 million. Lots of trading going on. So he did do a lot of activity, and it appears as though that activity resulted in a loss. Now, his counterpoint could be that, hey, this is a bad month. And I said in the Spencer Cornelia video, I have bad months. I have great months. It's a bad month. So I'm almost like extending out an excuse. But Coffeezilla, if you're somehow watching this video, and I think you already know, but just in case, what you should be requesting is, of course, further more information. But my point, and to your firepower here, he's not highlighting that. He's not saying that. He would have said it if that was the case. Instead, he goes down and says, just in the month of December, and he shows us the unrealized gains, when not showing us the date, which is a huge red flag. Huge red flag. So the best course of action, the simplest course of action were to be, and this is for all individuals, if you're participating in any club, request the time-weighted average return provided and calculated by the broker. Very simple. Very simple. Very straightforward. And that provides to you the actual time-weighted average rate of return. And why time-weighted over money-weighted? There's reason that deserves its own video because, for example, M1 Finance is cash-weighted, and cash-weighted has its problems, especially when you're trying to gauge portfolio performance over a period of time and kind of take out the inflows and the outflows effects. But time-weighted. So that's what you want to request. TD Ameritrade does that. Charles Schwab does it. Merrill does it. Everyone does it. M1 Finance is the only one I can think of off the top of my head that doesn't do it. So, and I don't know if Robinhood does. Robinhood probably implemented it later, but back in the day, they didn't really have a nice portion or a nice place to kind of show the total performance. It wasn't as good. So dealing with what we're looking at here, we're looking at the claim that he makes in this video, which let me actually showcase that because it's also kind of entertaining to at least entertain.
So this is at the age of 16. I was on Wall Street. The place that I worked at was PMF.
Okay. I was on Wall Street at the age of 16. Another claim that's very problematic just because that's very unlikely. To be interning at a Wall Street trading firm at the age of 16, I've never heard of that. I'm not going to say it's impossible. I've never heard of that. I don't know what this is showing me. This isn't really showing me anything. I have cards that are that old, and he's not even that old, but I have cards that still have a lot of color to them. So I don't know what this is showing. This isn't evidence at all. This is just a card that has a face of someone, and it could be from anything. I don't really know what it is, but he's making a claim here. And this is often what you always want to pay attention to. A lot of these people who engage in this sorts of activities will say, I am a Wall Street expert. I am a former trader in Wall Street. I am this, I am that, I am this, I am that. And that is used as a reason or rationale as to why you should trust them. It's an argument from authority. It's a logical fallacy. And so if you say that they have any credibility just because of who they are or what they did, that's, well, not what they did, actually. It's not what they did, but the titles that they have. It's argument from authority. I am right because, and so their argument doesn't rest on the argument itself. It rests on some point to authority. And so this is often used as a way to lure people in and make them feel comfortable. People who know better can see right past that, but people who are, let's say, newer, younger, more naive, they don't really see past that part. And so, which is unfortunate. But this, I don't really know what it shows me. And again, that Spencer spent time with this individual and didn't catch any of the, let's call it, red flags, and just said, yeah, that makes sense. Yeah, totally. Not definitely nothing sketchy, because you can see at the end of this video, Spencer here gives you a summary of, okay, well, what happened, blah, blah, blah. And by the way, apparently he did reach out. He talks to Spencer at the end of this video, which again is just like, my gosh, man, why are you pushing down your credibility here even further? Also, just notice this, but I think this could just be a time lag. His mouth is slightly open in here, and then it's slightly closed. It's closed here, so there could be just a time delay in the recording. It's not synced up. I'm probably looking too deep into that, but you know, details matter. Spencer Cornelia, by the way, if you're just so wondering, I did watch this video a long time ago and immediately figured that he isn't a person that actually does a good amount of due diligence or research. And there is a word for it. It escapes me. The type of bias that we sometimes see, or the lens that we sometimes see, it's some form of amnesia, it's called, when you are fairly familiar with the topic. In this case, it involves private prisons. And you see that someone has done research on it and didn't do a good job of it. And so you end up concluding, or you should end up concluding, that they probably don't do enough due diligence on other topics. And so the form of amnesia, I forgot the name of it. Some of you, I think Bacon's going to comment down there in the comments what it is, because I really want to remember what it is. But a lot of people will just ignore it and say, oh, I'll trust you for everything else. But that one topic you did talk about that I am fairly familiar with, you weren't very well researched, but I'm going to ignore that and then still listen to you for other topics. So I already knew from the get-go, and I've stated this within, I guess, my inner circles and my groups, that I didn't really view him as a credible figure just based off of prior content that I've absorbed from him. And it's not really something I'd go out of my way ever to watch, because I don't think there's any value to the content that he does provide. It's not very well researched. So the fact that he's doing this is kind of just further saying that my hunch prior to this was very correct, that he is either an individual who is morally corrupt, or he's an individual who isn't capable, which is, you know, kind of more of, I don't know what you want to be. Do you want to be someone who's morally corrupt and capable of rational thought, or someone who is not really very rational? I don't know. Comment down below, what would you prefer to be? Okay. And so in conclusion, there's another part of this video where he showcases this, and this part is Stripe. That's actually what Stripe looks like. This doesn't tell me much. This just tells me that there's some people out there that spent a lot of money with this guy, 82 payments. And you can kind of do the math in some of them and see that some people are charged differently. That's also quite common in groups like this that, you know, engage in these sorts of activities. They might have differential pricing. Might be that they're involved in like a sale, they got on a promotion. That could be the answer to that. But oftentimes you'll see customized price solutions. Not saying that this is the case, but it could be that this is the case. I see someone made 73 payments of $10,000 in total. Again, could have been a discount, could have not been a discount. I don't know. Don't have the information to that. But he doesn't really show us much. He scrolls down a little bit, and you see that there's a lot of, not a lot really, but a good enough amount of people. And his argument here is that there's not really any cancellations. There are some refunds issued on the right-hand side, but overall, it looks like it's just for some months. It could be that they are currently canceled or not current. It is unknown. I see that it looks like the pricing is also different on the right-hand side as far as the collection goes. So for example, you see that June payment, that's the last payment. So last payment was in June, and then some of them are Feb and March. So it's not consistent. So this is not a line. And so some of these actually right off the bat, you can tell immediately that they have canceled. I don't even have to see the year. So like, for example, that June one, the last payment was in June, unless they paid for like a year and there's an annual fee. That could be the answer to that. There's maybe a quarterly. No idea. Don't know the answer to that part, but those are just some things I'm picking up. And then, so this argument kind of can toss it to the side because it doesn't really make or address any of the points Coffee laid out. And the other point that's really interesting is the SEC point. So he makes this point that he was investigated by the SEC and he was not charged with anything, and therefore he is legitimate. That does not prove anything at all. That's not evidence that you're legit. It doesn't mean anything. It just means they didn't charge you with anything. That's all it means. The very fact that you were investigated by them is already kind of like should raise an eyebrow. Anyone who's investigated by the SEC, you got to do something to get their ire. So you are making some noise, but it doesn't prove that you're guilty or not guilty. It's just a nothing burger. But he's using it as a crutch to say I'm legitimate because I was investigated by the SEC. It's very different from getting an audit. An audit is different. So let's say you go get a affirmed audit opinion by a professional accounting firm. They audit your statements and they say, we verify that all these things are true. And they're going to put their name on those documents. And so they're basically putting their word behind you. That's a little different. This, not so much. This is a nothing burger. And then furthermore, the other point that he makes in this video, which is somewhere in, I'm trying to find it because I don't want to edit this video. So you guys are going to just see me if I don't find it in like seconds. Oh, sorry. No, wrong video. It's in this video. He makes a point on SMCI. And the point is, oh, by the way, the testimonials thing, none of it doesn't mean anything either because a lot of things can be bots. Again, he has to really address the point on the theft of trades. Where's the SMCI point? Sorry, I skipped over it. It's over here. Again, I'm not going to edit anything, so. But he makes a point here that he's doing options and options don't move the markets, etc. Because he's doing a straw man argument because that's not Coffee's argument at all. Coffee said, and this is true, by the way, if you have a successful trading strategy that's very good, it somehow gives you an edge, there is no reason to share it. There is zero reason to share it because once it is known, the arbitrage or the edge will close. That opportunity gap will close. And because people with better resources than you, because you're just a small little fish with $5 million, they will outdo you. And there's no competition, especially in trading. In trading, there's no ability to really compete. This is a fool's game. And that's why more often than not, you should raise an eyebrow to someone saying, oh, I'm a successful day trader. Really? Really? If you do have an edge, because there are people out there who have found their edge in a specific place in trading, but they're not going to share with you because their success is going to be predicated on their trades. He makes the argument that, like, why does a sports athlete get sponsorships? Because more money is more money. Well, this is a bit different. In this realm, it is a bit different because this is a realm where there's infinite scalability. You're talking about a salaried employee, a athlete who is in the realm primarily without sponsorships, in the realm of lack of scalability. They just get a really nice salary because you're thinking of it in a different mindset. Someone who maybe doesn't understand what large sums of money feels like. Recently came across it, but you don't understand really what it feels like. So you have a really high paying salary. That's great. You're a sports athlete. But if you delve into sponsorships, well, now, I mean, the sky's the limit. How many sponsorships can you take? That's what can take an athlete from making, just a measly, a couple $10 million a year to the hundreds, to the several hundreds of millions of dollars a year. You can get to Tiger Woods level, Cristiano Ronaldo levels. So that's the point. And so in investing, scalability, scale's your friend. There's so much scale to be had. You have no issues. Like Berkshire is the company that is probably thinking about, okay, we have a scale issue. We're so big, it's really hard. So I'd throw that argument completely out the window. And he doesn't even address that point. He just makes a straw man here and saying he can't move stocks. Coffee is not making that accusation whatsoever. You watch his video. He's not saying you're doing necessarily like a pump and dump. His primary issue is that if you had a trading style, that's the crux. If you had, because he might have said like you are engaging in some form of pump and dump. He might have said that at some point. I'm not addressing that point. I'm addressing how you address the point on giving away your trading strategies and then proceeded to give us an argument of why you're not moving stocks. Not really a good argument here. And then also proceeded to say that options don't move the market. I will leave you, my audience, because you guys are, I guess you guys are fairly familiar. You guys are above the average in terms of YouTube audience that watches financial content. You guys know the truth to that. So with that being said, this video is already long enough, 25 minutes of a breakdown. My conclusions, call to action. What should Coffeezilla do? Coffeezilla should request or say, none of this means anything. Show the time-weighted average return as provided by the broker, and or in this case, because I think it does warrant it in the purpose of this conversation, all the other statements. Those are necessary in order to provide, and full statements. Those are necessary to provide a full, comprehensive, complex opinion, like do a sort of quasi-audit on this individual. And then, but the time-weighted average rate of return should suffice at least to kind of gauge the performance level of this individual. It should gauge and tell us how successful of a trader and investor he is. And also, furthermore, kind of just asking those questions: why did you blur out the dates, etc. Also, if you're watching this video and kind of got some entertainment from it, feel free to like. And also, you could view this video as a form of like what red flags to look at, why details matter. And so this is kind of like low-hanging fruit, in my opinion, because this guy is like one of the more obvious ones who engages in these sorts of activities. Some are going to be less obvious, but this is one of the obvious ones. And so it's kind of funny to see that he posted this video acting like it's kind of disproving anything, and in fact it's again left more questions than answers, really. And I'd say then my conclusion on Spencer Cornelia is nothing's really changed in my opinion from him. He is still the same kind of just lack of genuine thought kind of person, critical thinking. And if he is at least not stupid, then he is completely he's lacking moral backbone. He lacks character. And so him doubling down on this, I have no idea what he's doing with his brand. I have no idea, but maybe it's making tons of money for him to do this. And that's the only conclusion. So yeah, I was definitely looking too much into it because I think it's just a time delay between the two. All right. With that being said, thank you guys so much for watching, and I will see you guys on the next one. Bye.